So
Yeah.
let's talk about stocks, shall we?
Hmm.
Citi and other analysts are predicting a year-end target of 4,600 for the S&P 500. Um, do you agree with this price, or do you have another year-end price target for the S&P? And that's really just staying flat because it's at
Yeah.
4,582 now, around that,
Yeah.
Yeah.
price. So it's at 4,600 now,
Pretty much.
realistically. So it's saying that it's going to get 4,600 by the end of the year is there's actually no growth.
Yeah.
So what's your price target for the S&P 500 for the rest of the year?
Yeah, I think we'll top out like at 48.83. Like that's where resistance is looking like it'll be at. And as long as they keep printing, it was really telling to see like how much institutions got behind Nvidia like after it got hot, even though like the P ratio was so wide. A traditional institution would not invest at that point, but then they had to pile in money to get those gains. It seems like it's one of those years where kind of like in ball, like they're letting the players play. And when we should be slowing down a little bit, we aren't. So like 4,800 is like really the top. So I think we'll end around like 47.50, 47.75, somewhere around there. Because I highly doubt that we'll stay flat. We should pull back some next month, but October and November I think will be great. Because also on the institutional side, you don't want to go into a holiday season reporting that you're down because your clients are going to leave or rotate to another fund. And that's a lot more important than like sector rotation, which is like client rotation. The first and fourth quarters are the ones that matter the most. So they can sustain like a potential down third quarter and then end up, but I think we'll be like north of 4,700 by end of year.
Yeah. I mean, that's a pretty good number. If we look at it, and we got to put things into context, right? That the number that it's at now, that what'd you say, the 48, the
Yes, yeah,
46,
like
45,
4,600
92, or something like
almost.
that.
Yeah.
That's the highest that it's been since April of last year. So that's a 19% gain, right?
Hmm.
And year to date, 19% gain. That's a pretty incredible
That's a
um,
lot for an index.
for an index
That's a lot.
to grow 19%. So that we just got to keep that in context. And then when we look at it from the standpoint of the rest of the year, and I see a lot of analysts saying the same things, like how much higher can we go? Are we going to see another 19% gain? Probably not likely,
Mm-mm.
right? But could we see a 6% gain from this point on?
It's possible.
The potential is there, which is more realistic. Now, even if we look at it, and that's why we always talk about, we have to be very mindful of percentages, right? We can't
Mhm.
sneeze at a 6% gain. That's an amazing gain for, especially for an index. When you take into account that it's already been up 19%, you're talking about a 25% gain for the year. Go back in the history and look how many times that the S&P has risen 25% in a year,
Hmm. Yeah,
right?
and the
And
last time, my bad. Go ahead.
that'll give you historical context about where you're at and how much of a opportune time this was over the past 6 months to be investing in the market. That's why we all try to say, wasn't a good time? Was a good time? Today is a good time.
Yeah, and normally after we end flat, if we are in a recession, we normally go up for like 3 years straight and then have a little pullback. We pulled back in 2018. It was flat. Then 19, 20, and 21 was amazing. 22, we slid down, and now we're back to the upside. So it's just following that same like macro trend of being up. And this is number one reason why I always say like, don't try and time the market. And it's better just to have money in the market working for you, opposed to you just trying to be in every trade and try and time it. Because that's ultimately, we're here to get wealthy. If you're here to get wealthy, please put wealthy in chat. You have to have the money working for you while you're sleeping. Because imagine if you got out of the market last year and thought Apple, Microsoft, AMD, Nvidia, Google was going to fall apart, and it's on a historic run. You have to keep your money flowing in the market for you, no matter what.
For sure.
Yeah.
Okay. Well, we'll monitor the S&P and see how high it goes, or if we have a pullback and a buying opportunity that may potentially happen. But
Yeah, and pullbacks happen every month, but the probability of it going flat or negative for the year, damn near impossible.
and
I
the
know
S and
Robert Kiyosaki is going to tell you otherwise, but it's not true.
and the S&P 500, for anybody that doesn't know, that Standard and Poor's 500 is 500 companies that are used as a microcosm for the stock market, and the index fund is what they call it, and that kind of is used as an indicator if the market is up or the market is down. So they're not talking about every single stock on the stock market. They're usually talking about the Dow Jones or the Russell 2000 or the S&P 500. And I think the S&P 500 is the most reliable index that most people use to gauge, stocks as a whole.
Yeah.
For anybody that's new to the show that might not know what the S&P 500 is,